Good morning and welcome back to our weekly market update. Today is Monday, August 3rd. I'm Văn Nguyên and I'll be filling in for Kelly over the next few weeks while she's out of the office. With that, let's jump right in. Broadly speaking, it was a week of resilience for U.S. equities. Stock finished the week higher after rebounding from an early week sell-off. The Nasdaq led the gains, up 1.59%. While the S&P 500 rose 1.05% and the Dow gained 1.04%. The market pulled back earlier in the week reflected concerns over intensifying AI competition, geopolitical tensions in the Middle East, crowded AI positioning, and expectations that interest rates may remain higher for longer. However, stronger than expected earnings from major technologies companies have restored investor confidence, driving a broad market rebound into the end of the week. As we can see from the chart, Microsoft and Amazon led the market higher following stronger than expected earnings. Alphabet also rebounded from the previous week sell-off. Meta, however, declined after raising its AI spending outlook. The key takeaway is that investors are becoming more selective. Companies demonstrating clear paths to AI monetization continue to be rewarded, while those facing rising AI investment costs are receiving greater scrutiny. Now let's turn to key geopolitical developments and economic data. Last week, geopolitical developments in the Middle East remained an important source of market volatility. Oil prices initially eased as immediate concerns over supply disruption faded, but recovered after renewed military activity involving Iran-backed Houthi forces and continued uncertainty surrounding shipping routes in the Red Sea and the Straits of Hormuz. At the same time, several important economic reports provided a clearer picture of the U.S. economy. The first estimate of second quarter GDP showed the U.S. economy grew at an annualized rate of 1.5%, slightly below expectations. However, the underlying details were more encouraging. Consumer spending remained resilient, while business investment continued to support economic growth. Overall, the report suggests the economy is moderating rather than weakening. Another key event last week was the Federal Reserve policy meeting. As expected, policymakers left interest rates unchanged and reiterated that future decisions will remain data-dependent. Following the Fed's meeting, attention turns to inflation data. With the release of the June PCE price index, the Federal Reserve's preferred inflation gauge. The report showed further easing in headline inflation, with the data coming in broadly in line with or slightly cooler than expectations. Headline PCE inflation rose 3.67% year-over-year, while core PCE increased 3.29%, remaining above the Fed's 2% target. On Friday, the Employment Cost Index for the second quarter provided a key update on labor cost pressures and came in slightly above expectation. Compensation costs for freelance workers increased 0.9% during the quarter, with wages and salaries rising 0.9% and benefits costs increasing 1%. On a year-over-year basis, total compensation rose 3.4%, reflecting continued strength in labor costs despite moderating economic growth. That concludes this week's market update. Thank you for tuning in, and we look forward to seeing you again next week.
The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.